The parent company of internet search giant Google announced a 20-for-1 stock split for its Class A, B, and C shares. You definitely must have heard of that. Effective July 15th of 2022 for shareholders of record July 1st. The split is subject to shareholder approval of increases in the authorized number of shares. With that split, it may be included in the Dow Jones Industrial Average and also may become much more affordable. As of January 25th, 2022, there were 300.754 million shares of the Class A common stock and 44.576 million shares of the Class B common stock and 315.639 million shares of the Class C common stock. The average volume for GOOG stock and GOOGL stock is in the low millions right now. With this split, it should increase substantially. But because the split will only be effective from the middle of July 2022, it will give the stock enough time to extend further, because generally we know the stock is a strongly bullish trend. The underlying trend has been a bullish one for years now. So it wouldn't be out of place to think that Google stock, GOOG and GOOGL would not have extended by the 15th of July. So the point is that the aim of making it more affordable may slightly be defeated, as the price per share will go higher than what it is now in early February of 2022. So as at the 9th of August 2021, it was trading at $2,706, and by today, the 2nd of February, it is at $2,950. Granted that as of the 25th of January, it dropped to $2,534. So the projection for early next month, early March, is $3,444.80. That's a projection. So over the next 5 months, it is expected to reach $4,159.51 based on the highs and the lows of the last 6 months of the stock. So if you divided the projected price of $4,159.51 by 20, you will get a price of $207.97, which is hardly the most affordable of stock prices. That's arguable. So, well, what is certain is that retail investors, especially the ones that joined since the lockdown, since the 2022 lockdown, may not be stocking up on the stock as such. This may ensure that its volatility will remain modest, but will be significantly more than what it is now as of February 2022. So at the same time, the diversity of the holders of the stock will broaden, and with that, things may not remain the same as it is now. So the stock's underlying trend may remain bullish, but the volume may also ensure that it may not leave as much as it has done over the last few years. So we also know that of late there were certain announcements or discussions by the CEO, and they're saying that they're watching the blockchain space closely to see how it could contribute to the how the company can contribute to the development of the World Wide Web, known as the Web3. So obviously, Google makes money from performance advertising, brand advertising, Google Play, hardware, the phones and all that stuff, and YouTube, non-advertising and all that stuff. So this is a new development. The company has not done any splits in a very long time. I don't even really think it has ever done any before. It may have done, but I'm not sure. So things are going to change. Market participants are definitely keen on Google. Google is also definitely involved in the NFT space. They're going to get involved as they have indicated in the blockchain space and all stuff. But they are watching, as they indicated. So I mean, I don't need to emphasize the relevance of Google, and all that stuff. So these are the things you have to bear in mind. But we may be totally wrong. It may still continue to leap as it has been doing so, even with the split and even with the tens of billions of shares that will be outstanding by the time the split is effective. So see what you make of Google and Alphabet stocks, and would you want to buy them? Would you buy? Yeah, that's the question. Would you buy it? So see what you make of it, and thank you very much for watching this video.